Welcome back. Just before we move to Jay Thakkar for a chart check, take a look at Ola Electric yet again. Stock is up 12%, now is above the mark of 60 rupees and has broken above its 200-day moving average, which was at around 59.5. So well above its 200 DMA. The month of August, the best one that it had since its listing in August of 24. And the last 2 weeks have seen the stock surge as much as 50%. So most of the gains that the stock has seen in the month of August has come in the second half of the month. That's Ola Electric for you now, closing in on 61. Of course, still below its IPO price of 76 and well below its post-listing high of 157. But recovering some lost ground from its all-time lows is Ola Electric. Jay Thakkar from ICICI Securities now joins in for a quick chart check. Jay, good morning. Thank you for joining in. There's some recovery that you're seeing from lower levels, but the question, as has been the case, is this sustainable? Even we started off last Monday on a positive note, but then things just fell apart as the week went by. What are the charts indicating for the Nifty right now, and what are your stock recommendations for the morning?
Good morning to you, Gurmaz. And yes, in fact, the weekly close was not that great for the indices. I mean, we had seen negative weekly close, clear selling pressure, and we had seen the rollover as well. I mean, which was quite weak. We had a monthly expiry last week, and Hormaz, we saw that maximum on the most of the stocks had in fact seen a short rollover, barring few sectors or stocks from the auto sector and the cement sector, or maybe some from the FMCG or consumption as well overall. The rest of the market had overall seen a good short rollover, and in fact for the indices also, if you see Hormaz, then it was 83 to 81% respectively for Nifty and Bank Nifty, and that clearly indicating that shorts had got rolled over, and we saw again a negative close on a Friday. Fortunately, we had a good GDP numbers post-market hours, and the reaction of the same has been seen in today's market. And FI net positions also in the index futures is still negative. I mean, it's at 8.5% net long only, and which is also one of the lowest, I would say, or at the extreme. Things are quite oversold. Hence, we are seeing some technical bounce back. I mean, Nifty is bouncing back also nearly from its 200 DEMA. So all of these factors, Hormaz, is resulting into a bounce back in the indices, both Nifty and Bank Nifty, which can help Nifty to bounce back to 24,650, 670, 700, probably on a Bank Nifty 54,500 to 55,000 range. But I'm seeing this bounce as a technical bounce back only as of now, or a dead cat bounce, you can say, as the overall derivative data is not that great, which indicates that the bottom is in form. Bottom is already formed. That's not the clear indication. So the short-term bounce, and I have two buy recommendations for this bounce back. One would be from the auto pack, of course. It's a Bajaj Auto. As a disclaimer, we have recommended a bull call spread to our clients on this. Bajaj Auto is trading at around 88.62. One can target 9100 to 9250 in the near term. One can place a stop loss at 8700. And the second buy recommendation would be from the cement pack. Dalmia Bharat has seen a good long rollover, good breakout. It's trading around the levels of 24.16 right now. One can place a stop loss below 2340 and target 2600 to 2700 going forward in the short term.
Thank you very much for that. Moving on now to Zydus Wellness for more on the news and to understand the story behind it, Mangalam joins in.
Well, Zydus Wellness is one of the top gainers today, and that's largely on account of an acquisition that the company has made. And more importantly, it's an acquisition that ticks all boxes. Why do I say that? Because, one, it's called Comfort Clicks. It is the first overseas acquisition that the company has made, and it's a sizable one, nearly 240 million pounds, which amounts to about 2,400 crore rupees. And it's in the business of vitamins, minerals, and the supplements segment. Remember, this market itself in the UK and Europe is close to around 11 billion pounds. And the 5-year revenue CAGR of this company has been 57%. So to put things into perspective, the last year, this business did about 1,340 crores of revenues, which is a 50% addition to Zydus Wellness's own revenues. And that has happened at better margins as well, because the adjusted operating profit of close to 21 million pounds amounts to about 15.6% as margins, and this compares with Zydus's own margins at 14%. So you have a sizable chunk, good growth and margin accretion coming in. The question is at what price? It's coming at 2 times sales and 10 times EBITDA, which is fair because the company's own valuations right now are nearly 4 times sales, and they've themselves said that this will be cash EPS accretive from year 1 itself. The biggest trigger is Comfort Click operates in geographies which are complementary to Zydus. So obviously there are revenue scale synergies for either of them. And the second part is that a large part of their revenues come in from online and D2C channels. So this opens another channel up for them as well. So all things clicked and the stock doing extremely well.
Oh, yes, it is. The stock higher in trade by 7%. Thank you so much for bringing all these details to us, Mangalam. Before we slip into a break, this is a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclass, and curated lifestyle benefits. Okay. All right. Actually, before we get into the break, let's get a check on what's happening in the world of F&O as well. Sudarshan is bringing us all the latest trends now.
So it's a good start to the week, and thanks to the all-round gains that we are seeing in the IT pack. Nifty IT is up almost more than 1%. But one sector that has to outperform is the Nifty Bank. Currently, it's underperforming, and if market has to move higher, the financial sector has to move upward as well. Currently, it's just up around 0.3%. But we're getting a positive indication from the volatility index. It's currently down 2%. It's at 11.50. Put call ratio also, it's at 0.89 versus 0.75. Now, I was talking about the Nifty Bank. So support remains around today's intraday low that we have seen of 53,650. But the major buying will only come when Nifty Bank crosses the level of 55,000. Now coming to the Nifty options data. In the call options, 24,550 and 24,600. Both are saying huge option buildup and also good parties. We are seeing an increase in the premium. For 24,550, premium has increased to 43 from 39, and 24,600 premium has risen to 67 from previous day's close of 53. But in contrary, put option on 24,500, premium has come down to 33 versus yesterday's close of 104. So it tells you that for now, support for Nifty remains around 24,500. Looks tough for Nifty to go below 24,500. So I've taken the support around 24,460, 24,500 resistance. So basically for Nifty also, major buying will come only when it crosses the level of 24,600. Two stocks I have taken. First one is Keynes Technology. All these like stocks, Keynes Technology, Dixon Technology, or you talk about Amber Enterprises, all these stocks are seeing huge buying. So Keynes Technology, fresh longs, and another stock seeing on the back of positive brokerage note is the CG Power. There also we are seeing fresh longs.
Yeah, we just heard from the management of Keynes Technologies earlier in the day. Fresh longs seen there, fresh longs seen on CG Power as well. Sudarshan, thank you for that update. Take a short break, continue our conversation on the markets with Varun Lochab of HDFC Securities on the other side. Stay tuned.
Above 24,500, reclaimed that in the morning with a 100-point up move. Sensex has gained close to about 350 points. Sectorally, IT is on the front foot. The Nifty IT index has a gain of about 1.25%. You've got the PSU banks higher. Realty is up. Oil and gas is seeing some amount of gains. And on the mid-cap end of trade, the small cap and the mid-cap index is showing considerable strength. You've got Ola Electric. We'll discuss that. Very large volumes. But the stock, even after the up move that we've recently seen, 46% higher this month, is about 51% away. It's not 51. I think it's about, I'm not sure. It's about, I think, 50% away from its all-time high levels. Rico Auto, GMDC, Aether Energy, Granules India are a couple of the other stocks which are buzzing in trade. Let's now go across to Manisha for a quick check on what's happening in the commodities market.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
In Crypto Corner today, we are talking about Bitcoin halving. This is a thing that has been buzzing every year. Every 4 years when Bitcoin halving happens, we do see a price impact as well. And we do see pardon me, and investment and participation has increased as well. As you all know, Bitcoin, the supply is limited to 21 million Bitcoins here. And that clearly has been the major backbone of the kind of price run that we have seen come in for Bitcoins there. The underlying code ensures that there can be no more than 21 million Bitcoins that will ever exist. And in that sense as well, Bitcoin halving comes in as very, very important there. So the finite supply that you have of Bitcoins does ensure that you see prices on the higher side there. The economic statement and the support that its value system gets because of that is also one of the main reasons. From here, the 21 million Bitcoins, the way you see it, it's distributed through mining. There are miners in various countries doing that. The 21 million Bitcoins in existence are scheduled to be mined through and finished by 2140 there. At this point in time, when you look at all of those numbers, codes and calculations, we do understand that almost 90% of Bitcoin's total supply has already been mined. Also, currently, about 900 Bitcoins are mined every day. This is as per the calculation. Now, the process of reducing and to sustain emission and increase scarcity, the number of Bitcoins emitted per block is regularly needed to be reduced. And that is where Bitcoin halving comes into place. This is the reason that you have an importance of that as well. Now, nearly 3 million of Bitcoins are currently forgotten. This is another number that the street looks at. This is because there's scarcity. One, it also has to do with the reduction in rate there. The missing Bitcoins also comes in from the fact that you have forgotten wallet details, missing passwords or forgotten passwords. It also has to do with the lost hard drives and owned by deceased investors. Now, these are lost forever. So 3 million Bitcoins are lost forever at this point in time. This is the latest data that we have from 2024 end. Now, when you look at the halving dates, where the first halving did happen in November, that was in nearly 2012 there. And we're also looking at first halving event that was done to reduce Bitcoins mining there. So from 50, it was reduced to 20. The last of the recent of the Bitcoin halving happened on 20th of April 2024. The halving happened at a block height of around 840,000 there, and it has been reduced quite considerably. So the number that we did see was from 6.25 to 3.125. Now, the next Bitcoin halving, as I said, happens every 4 years. So the next one is going to be happening on 17 April 2028 at a block height of nearly 10 lakh Bitcoins there. And the expectation is that the number that we saw in the previous halving, that was in 2024 at 3.125, the rewards will reduce to 1.5625. So the miners would get that as a reward there. After the complete Bitcoin mining has happened by 2140, the way the miners will earn would be in sense of transactions, in sense of royalty as well going forward. So that is where the Bitcoin halving importance comes into picture.
Indeed. Interesting there, Manisha. Thank you for that update. Ashok Leyland's numbers for the auto sales on your screens now. Domestic sales up 2% and total sales at 15,239. Slightly better than expectations as well. By the way, the Nifty back at 24,550 as we speak. So take a short break. More news and updates on the other side. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Fatakia. It is a new month, a fresh week as well, and it started on the positive note. Last month was nothing great in terms of the moves that we saw. In fact, it was the biggest weekly fall in 5 months that we saw last week. So some of those gains have come back. A lot is happening. Geopolitically, we have been talking about that summit that's happening in China. The GST numbers have been better than what the street was working with, but those are backdated, and Lata explained what the internals are looking like. But a lot of things to look forward to. The biggest question remains what happens geopolitically, what happens with supply chains globally, IT taking it forward, mid-caps doing really well. So yes, barring few sectors, it's a good-looking screen overall.
You know, if you have to pin it down to, few factors driving, one, that Q1 GDP print, 7.8%. Two, as you said, geopolitically, Modi in Beijing. Three, you've got the GST Council meet, which is coming up. Numbers are one, you've got the Council meet also up ahead. And not to forget that in the last 3 trading sessions, markets were actually in the red. They closed lower. So there is a recovery from weaker levels. Mid-caps are doing very well. The mid-cap index is up 1.3%. And particularly on IT, there was a CLSA note, which basically said that, the street is now globally penciling in Fed rate cuts. A Fed rate cut is positive for valuations of IT companies. IT is not performed, it's under-owned, and therefore it's positive. And as and when these Fed rate cuts come through, which is why they're overweight. And I think they went on to even say that we could see a 10 to 15% increase in valuation multiples of Indian IT companies. 10 to 15% PE re-rating. Well, that's about the big picture, the sectors which are doing well. Hormus is now at the big wall, and he's going to tell us about the stocks.
Oh, plenty of broader market movers. Starting off the week on a positive note, starting off the month on a positive note as well. And Hindustan Zinc, of course, being the only listed pure play silver play in the country. Silver prices at a record high, having an effect on Hindustan Zinc as well. 4.5% higher on this stock, and has snapped a 3-day losing streak as well. At last check, it has had already 40 lakh shares traded compared to a 20-day average of anywhere between 5 to 6 lakh. And courtesy of this move, the stock has also broken above its 50-day moving average, which was at around 433, now comfortably above that 50 DMA. Capital market stocks are doing well for themselves today, and Anand Rathi Wealth is one of them, along with other names like BSE, CDSL, all of them doing well, 5% higher on this stock as well. And on last check, almost 2.5 lakh shares had already changed hands compared to a 20-day average of just around close to 45 to 50,000 shares. And the stock is trading at record highs today, and it was the 4th straight month of gains that the stock had seen in the month of August, as a result of which the stock is up 50% so far in 2025. The other one that has bucked the trend or has snapped a losing streak is Manali Petro. It snapped a 6-day losing streak in today's session. We've already had a 10 lakh shares change hands compared to a 20-day average of just 1.5 lakh. 7% higher on the stock, and another important level on the stock to watch is that 50 DMA level of 68.7, and it's still just above those levels as well. And as a result of this move, the stock has turned positive on a year-to-date basis after 3 years of negative returns. And of course, the news-driven stock, Zydus Wellness, after the acquisition that it announced, the biggest single-day gain since July of last year. Volumes also at the highest level since June. Almost 4 lakh shares already having changed hands compared to a 20-day average of just around 10,000 shares. So a very heavy volume mover is Zydus Wellness, and the stock is also up 10% so far on a year-to-date basis.
All right, makes sense. Thank you so much for all those buzzing names, some interesting ones there actually. But mid-caps, they continue to soar higher. We have a lot of buzzing elements around. Sterlite Tech is one of the stocks which is on our radar. Rima, what's the news here?
Well, the news is that the company is likely to pay a very large order. So they've lost a legal case. So let me just run you through the details. So Sterlite Tech, there was a jury in South Carolina which ruled in the month of August that Sterlite Tech's subsidiary misused trade secrets which belonged to another company, its Italian rival. So the case claimed that they breached some non-compete confidentiality agreement. They shared, the other company's confidential information with Sterlite, giving it an unfair advantage. So that jury has ruled that Sterlite Tech subsidiary will need to pay $96.5 million in terms of damages. But this is the jury ruling. Sterlite Tech has informed the exchanges that they intend to file an appeal, and the ultimate financial implications will be assessed on the final resolution of the matter. So that's hurting the stock, 4.5% down, $96.5 million. That's about 800 crore in damages is what the jury has said Sterlite Tech needs to pay. But the company has said that they will file an appeal and contest this order.
4.5% lower on Sterlite Tech. It's slightly off the lows of the day though. And considering the fact that there is some recovery in the broader markets, it's playing out there as well. But for Sterlite Tech, the stock is down for the 6th straight session and almost 17% gone in these last 6 sessions. And as a result of this fall, the stock has also broken below its 50-day moving average of 117 as well. So not good going for Sterlite Tech. Of course, the big event on Friday was the Reliance AGM, and the biggest announcement from that, of course, was the Jio IPO. And a lot of brokerages have written about that as well, Rima.
Indeed. I think the big question that everyone had is that this Jio IPO was so awaited, but why is the Reliance share not reacting positively? It was down even in Friday's trade, and it kept falling in the last 1 hour. And even today, you aren't seeing that optimism, right? We kept saying that this is such a value unlocking measure. It should reflect in the stock price. Now, you can go about an IPO in two ways. Either you retain Reliance Jio under RIL and simply list it. So the beneficiary of any fundraise would be Reliance Industries. The shareholders of Reliance Industries do not benefit. They will only benefit if the valuation of RIL as a whole rises. The other way is, which is what they did with Jio Financial, you basically demerge it and then you will get proportionate shares of Reliance Industries. Basically, you demerge it and then list Jio. So if you have one share maybe of Reliance Industries based on the merger ratio that they agree upon, you will get some shares of Reliance Jio, for instance. So these are the two options. The company has said has not clarified which option they will go with, but the street believes they will go with option one, which is basically retain Jio under RIL and simply list it, which means the proceeds flow to Reliance Industries and Jio continues to remain a subsidiary of RIL, and RIL will now have a holding company discount. So that's the reason. The reason they're not going with that other option of demerger and list because it's far more complicated, which is why you're not seeing the stock reaction. But that said, what the street is saying that we could see a round of tariff increases before the Jio IPO. If you remember, many big global investors had invested in the company in 2020. Now, there would be a certain IRR you need to give them. Right? So Jefferies has done some analysis and they're saying that if those global investors need a 10% IRR, then the EBITDA of the company has to be this much. And therefore, to arrive at it, they're saying a 20% tariff increase is possible before the IPO. JM Financial also says that I think they spoke about a 15% tariff is possible. So that is a broader implication, which is beneficial for everyone. Reliance Industries, Bharti Airtel, and even a Bharti Hexacom, for instance, or Vodafone Idea.
Okay. Is there any valuation that brokers
about $135 billion to about $150 billion is the enterprise valuation that the street is currently now assuming.
Okay, all right. So that's about Reliance Jio. The next thing, of course, to watch out for will also be the tariff hikes that Rima just spoke about. Let's go across to Vamakshi because power stocks are in focus on the back of some brokerage notes. Vamakshi, what's the take?
Well, hi Sonal. First of all, Torrent Power is in focus on the back of an LOA that they won for a thermal plant in Madhya Pradesh. There's a note that has come in from Morgan Stanley. They have an overweight call on this counter with a target price of 1,444, and they say that this plant can generate 15 to 17% IRRs, assuming that the debt to equity ratio of around 70 to 30. Now they believe the capacity charge could be 4.1 to 4.3 rupees per unit, and they've also highlighted that the balance sheet currently has sufficient headroom for growth with the current net debt to EBITDA of 1.4 times and the net debt to equity of 0.4 times. So Morgan Stanley appears to be quite bullish as far as Torrent Power is concerned. The next stock we're watching out for is CG Power. Morgan Stanley again has initiated coverage on this counter with a buy call, target price of $7.99. They say that the company is among India's most diversified capital good players. They have a strong presence in manufacturing, which includes motor franchise, as well as they have a very strong growth in power with their equipment such as transformers as well as switchgear. So overall, what they're saying is that it's a very diversified entity. Apart from that, the company is also building capabilities in both semiconductors. Keep in mind that they had recently announced the launch of their pilot plant in Gujarat. Apart from that, they're also expanding their presence in the railway segment. So overall, it seems like a very diversified capital theme company. They've also gone ahead and given their estimates for different segments. So industrials over here, they're expecting the revenue to grow at 14% and the EBIT to grow at 15% between FY25 to 28. For power systems, revenue growth of 35% and EBIT growth of almost 42%, much higher as compared to industrials is what they're expecting. And semiconductors, as far as that is concerned, they believe that the peak asset turn of almost 1.9 times could be expected by FY31. So overall, they appear to be quite bullish on CG Power as well. They've got a buy call on CG Power.
Indeed, CG Power 4% higher on the stock, was up 5% on Friday as well. 15% upside is what Morgan Stanley is projecting as a base case scenario. Their bull case target is 1,044, which based on Friday's closing is a 50% upside. from those levels. Vamakshi, thank you for that update. Take a short break. On the other side, we put the spotlight on cryptos in our special segment. Stay tuned. We'll be right back.
Welcome back. Let's just quickly talk about CLSA and their view on IT. They're saying the CLSA global macroeconomist is expecting 75 basis points of rate cuts in the US over the next 1 to 1.5 years. Now, this could result in a PE re-rating of 10 to 15% for Indian IT companies. Plus, there is a potential for discretionary demand reviving in sectors like real estate, utilities, materials, staples, and energy, which have been weak so far. So therefore, CLSA remains positive on the Indian IT sector because valuations, according to them, are attractive. They have an overweight call on Persistent Systems, Tech Mahindra, outperform on TCS, Infosys, HCL Tech, Wipro, and a hold on LTI Mindtree. So basically, that's the call coming through on CLSA on IT. Moving on now, Varun Locha from HDFC Securities is now joining in. Varun, your entire thesis for building the model portfolio is back companies, individual stocks, where there is an earnings visibility. And we could see like a mid-teens at least kind of an earnings potential. Now, IT doesn't fall in that category. Earnings, at least for the next 1-2 years, is going to remain subdued. But on the other hand, some believe valuations are fairly attractive. And plus, there will be that kicker on account of that Fed rate cut as and when it comes. So, I mean, how are you looking at IT right now? And which are the IT stocks in your model portfolio, if any at all?
Yeah. So, on IT so far for last 12 to 18 months, we were negative. So we were running a big underweight sort of a position on the sector. However, I think after the recent correction in several years, again, for the first time, IT is looking okay, at least from a risk reward perspective over next 12 to 18 months. As you rightly said, earning growth still remains a challenge. On our bottom-up basis, we are still not projecting a double-digit earning growth for the sector for the next couple of years. But, I think the valuations are also more or less reflecting that. And in that context, couple of large caps, we have added our weights. So both Infosys and TCS, we have added weights in our model portfolio, and we are no longer negative on these two stocks. However, mid-cap IT, we are still staying away, given stretched valuations. However, growth in some of those names like Persistent have been good, but still, I think risk reward on some of the mid-cap IT names is not as favorable. But large-cap IT we have been adding now.
Okay. You've been adding large cap IT, but you have been excluding some of these oil and gas names. You remain underweight there, but the exclusion also includes GAIL. Can you give us a sense of what's happening here? Because GAIL does have some triggers going forward, be it the tariff hikes. This is something that the street is watching out for. What makes you underweight on this one?
I think it is more a case of, GAIL again, we have held in our model portfolio for last 3 to 4 years, and it has done quite well in that time frame. Now, in the recent rejig of our model portfolio, we are looking at fresh ideas which have corrected quite sharply in last 12, 18 months. So some of the consumption names we have added, IT, as I said, we have increased our weight. So it's just a case of, how much upside are we seeing now? Because last 12 months, we were more into the protect the downside kind of a mode on our model portfolio and what we were advising to clients. However, I think now we are not being overly negative on markets, and therefore now looking for fresh, ideas which can give you higher upside over next, 12 to 18 months. So GAIL, while it's still positively rated and within the cash stocks, it's our top pick. From the analyst perspective, we have just removed it from the model portfolio, given some of the better stock ideas which are presenting themselves now after the correction.
So does a similar thesis apply to MCX as well? You've removed that as well. You have decreased your weightage in the model portfolio for the stock. So do you continue to maintain your a positive stance on the capital market space overall? And this weightage reduction is only because of the fact that the stock has run up significantly in the past?
Yeah, so see, capital markets as a theme now in the last 6 months itself, we have not been, it's not a theme that we are now overly bullish on. In fact, we had removed BSC from our model portfolio almost 6-9 months back, and MCX we still have. So that's the only sort of a capital market stock we have in our model portfolio left now. But even out there, we have trimmed our weight, given, it has done quite well over last 12 to 18 months. And as I said, we are just taking some money off the table where valuations now present less upside. And, so similarly, something like Sirma from the EMS space, we have reduced our weight a little bit, but we still continue to hold these names, which means that within that space, they are still the preferred names. But, valuations are now making us slightly, take some profit off the table and redeploy it in other areas which have become more attractive.
Varun, we won't have time to discuss all the stocks in your model portfolio. So why don't you just tell us, 2-3 stocks where you have the most conviction now at these levels and why?
Yeah. So, it's in terms of, it's like, varies by sector. So in terms of autos, we have increased our weight. Again, this is one sector we have become more bullish. Maruti is our top pick out there, Maruti and Ather Energy. So we have, Maruti, M&M, Hero, multiple auto stocks in our model portfolio, but those are the top picks. Industrials, we are still, fairly positive. While consumption we have increased, we have not decreased, industrials and real estate that much. So out there, L&T and Cummins, the two are the top two ideas, and Shobha in the real estate space. We see good absolute upside in some of these names over next, 6 to 12 months. So it varies across sectors. In terms of consumption, also, as I said, we have added names. We have been adding for last 6 months. So DMart and Swiggy, we had added, around 5-6 months back when they had fallen down. We still continue to hold them. They are our top picks in the consumer discretionary space. So now, at least in multiple sectors, we are able to spot opportunities, which was not the case in the last 12 to 18 months when, valuations was bigger concern. I would not say that they have become really, really attractive now, but at least you are able to, get some stocks where, earning momentum would be positive and valuations are at least not completely stratospheric.
Okay. Varun, you mentioned Sobha, and that is something that you like now. I wanted to understand, since we talk about being in the later stage of the uptick that we've been seeing in the real estate cycle, do you think most of it is not priced into Sobha? Because other real estate stocks did see that surge last year. What makes you confident on this particular name?
Yeah, so I think you're right. As an overall space, we are no longer as positive on real estate as what we were in the last 2 or 3 years. So you're right, a lot of these stocks are pricing in the residential upcycle continuing. However, in case of Sobha, we believe, the pre-sales momentum is actually, kind of picking up this year compared to previous year. So if you recall, FY25 was a sort of a weak year for Sobha from a pre-sales perspective. FY26 will be strong. We are going to see a 30% plus growth, and we believe this momentum can sustain in FY27 as well. They are entering multiple new cities. The response to their projects has been good across some of the newer geographies as well. If you look at the developable land bank, which they already have, there is room to improve the pre-sales momentum over next 2 to 3 years, just basis the old land bank. So it's very stock specific sort of triggers in this year, but at aggregate real estate level, you are right that probably it's not the sector to be really overweight on. But as I said, the market right now is all about stock picking rather than, taking sectoral calls or broader market calls.
Right. Varun, pleasure having you as always. There was a lot of questions to ask. We're running out of time. Thank you so much for joining us today on the show. Take a short break. On the other side, our big story of the day on the auto segment comes up on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour, and it's time for our special segment, The Big Story. And today the spotlight is on the auto sector. The focus is ahead of the GST Council meet on September 3rd and 4th. The industry has once again raised its demand of a uniform GST rate. Also in focus is the monthly sales data, which has largely been in line. Of course, we'll talk about it in greater detail. Let's get started with that. The key topping point, of course, is the GST change that is expected. Sudarshan, tell us more. What is expected in the upcoming GST Council meet?
So all-important GST Council meet starts this week on Wednesday. So we'll have to, first we had some news through sources, and that we'll be seeing some GST changes, basically GST reduction. So first I'll tell you which all segments might see certain GST reduction that might happen to 18% from 28%. So first one is ambulance vehicle. If it happens, the biggest beneficiary is expected to be Maruti Suzuki. Next one is petrol, diesel, LPG and CNG vehicles. But for petrol vehicles, engine capacity has to be up to 1200 cc and in length it has to be of 4000 meters. Second, for diesel vehicles, engine capacity has to be 1500 cc. So for these two only, there will be a reduction if it happens. Third is bikes and three-wheeler segment. Especially for motorcycles, rate will be reduced only for those bikes which have capacity up to or less than 350 cc. And fourth is auto accessories like auto parts, seats and all those auto parts. There also we can see GST reduction. But there are certain segments where we can see GST increase, and those are first, racing cars, second, motor vehicles of more than 1200 cc in petrol segment and in length 4000 meters, and third, bikes if capacity is more than 350 cc. There also we can see GST increase.
Well, you know, Sudarshan, there has been a lot of chatter around this GST with regards to the automobile space, and there has also been a demand from the industry for a uniform GST rate. How does one read into this, and what will be the impact in case GST is hiked for bikes of more than 350cc capacity?
So I'll tell you, immediate impact would be negligible. Now, everyone thinks that Royal Enfield, which is leader in 350cc or more than that, 86% of their volumes come from the segment which has capacity of 350cc or less than that. So immediate, there would be negligible impact. But the problem is all these companies are moving towards premiumization. So if they believe that if GST Council goes ahead and increases GST rate for engine capacity of more than 350cc, it would be tough for them to compete with global players. So Siddharth Lal over the weekend has said that raising GST for motorcycles above 350cc would damage a segment that is vital to India's global edge, and a split tax regime would cripple investment and scale, and also it would restrict global reach and also hand on opening to foreign competitors. Hero Moto chairman also made a comment, but actually he welcomed GST cut if it happens and it's approved by GST Council. He said GST cut will offer much needed relief to first-time buyers. So overall, immediate, there would not be impact even if GST Council goes ahead and increases GST rate for bike having capacity of more than 350cc.
Got that. It's also 1st of September. The August monthly sales have started trickling in. What's the picture? How are the numbers looking?
So as of now, incumbent players, if we talk about Bajaj Auto, Escorts Kubota and Ashok Leyland have reported sales, and sales of all these three companies have been largely in line or slightly better than estimates. So first talking about Bajaj Auto, domestic sales have slipped but are in line with estimates. Export and three-wheeler segments continue to do well. Export has seen a growth of 29%. Even three-wheeler segment has seen a growth somewhere in the range of 29 to 30%. For Escorts Kubota, both the segments, domestic as well as exports, have seen a healthy growth. Domestic has seen growth of 29%. Export has seen a growth of almost 50%. Ashok Leyland has reported numbers largely in line with estimates. They have also seen a somewhere growth of 2 to 3%. Now, biggest positive from August auto sales has come for electric two-wheelers. Both Ola Electric and Ather Energy have seen an improved increase in Vahan registration data. If you talk about Ola Electric, it has reclaimed number 2 position on market share front, and Ather Energies, for this company, August 2025 has been the best ever month.
Okay, all right. So best ever months for some of these stocks. What are some of the tailwinds for the sector going forward, Sudarshan, now?
So festive season is approaching. So normally festive season is very good for all these companies which have huge presence in the entry-level segment. In two-wheeler segment, Hero Moto might do very well. Similarly, we can in four-wheeler segment, we can see the similar picture from Maruti Suzuki. Third, implementation of GST cut timeline will be very important. Last week, we had some reports saying that it might happen ahead of the festive season. If it goes ahead, it will be very positive for the auto sector. Third, for CV sector, there might be an improvement if government goes ahead and increase its capex further. And fourth, healthy monsoon. We had very good monsoon across the country, and we have been saying that rural segment has been doing much better than urban sector. That will be positive for tractor segment. So today, early morning, we had Ramdev Agrawal on the channel. He commented about GST cut and its impact on the auto sector. Let's listen in.
A lot of things are going to happen, but right now that looks to be overriding. It's the nature of the market. They need one headline, and for 10-15 days they will talk about it, and after that they'll move on to the next one. And whatever happens in the first one, nobody's bothered. So I think as the GST thing comes closer and actually people come to know that 28 is abolished and it has come down to 18%. So you look at some auto companies, particularly where the demand is very sensitive to the price cuts. Say like motorcycles particularly, say if it comes down from 28 to 18, I mean you could see massive surge in the demand. But since it has not happened, it is very difficult to figure out whether it will be 20%, 30% jump, or will it be just a muted kind of situation. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year.
Well, on that note, it's time for a very short break with the news that still hovering around 24,550 on the Nifty.
Welcome back. The stock in focus is Premier Energies, and that is on the back of an order win worth around 2,700 crore rupees. Now, on the other hand, almost 18,000 crore rupee worth of shares of the company have freed up for trade today as their lock-in period has ended. Vinay Rustagi, the Chief Business Officer of the company, is joining us now from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. Vinay, good morning. Thank you for joining in. I start off with your order book position, but first off, tell us more about the order that you have just won, that you have announced today, the 2,700 crore order win. What does that do to your order book? And is your order book completely domestic focused, or is there an export component involved in it as well?
Sure. Good morning. Thank you for having me. So, our order book, if you look at the end of last quarter, was 8,500 crore rupees. Including these new orders, the order book now stands at more than 10,000 crores. These orders have come from top-tier IPPs in India, and they're all for consumption in India.
Okay. All right. So, Vinay, wanted to understand your export exposure as well in terms of order book overall. How much is it currently? And, earlier you had indicated that you're insulated from Chinese market. We are seeing a lot happening geopolitically as well. How would it change the supply chain overall for you, for the industry as well?
See, in terms of, first of all, the order book, more than 99% of our order book comes from India. So, as a consciously given the movement in various parameters, we have kind of diverted and positioned ourselves almost 100% on the Indian market, which stands us in very good stead. In terms of the supply chain, we are again increasing more and more of the value chain of our production domestically. We obviously still buy, some components and raw materials from China. We have not faced any problems so far. And even for our new lines, the new investment projects, we are diversifying systematically away where we are buying equipment from a host of countries, wherein any short-term supply disruption is not going to affect our operations.
So, Vinay, if you can just tell us how much of the raw material or equipments are imported overall, and which are the countries where you're importing from currently?
So, if you look at what percentage of the raw material is imported, that varies from quarter to quarter and order to order, because our customers dictate They basically tell us, where the bill of material is going to come from. It is also very different for cells as well as the module part of our business. But more importantly, as I said, with the government's Make in India policy, government is now very keen that all raw materials, whether it is glass, back sheets, aluminium frames, etc., are all made in India. We ourselves are integrating backwards, and our expectation is that in the next 2 to 3 years, almost the 100% bill of material for both cells and modules will be made in India.
Some of the players, what we picked up from the industry is that there were delays in setting up solar power setups, land availability, etc. What is the situation on the ground right now? And give us a sense of your capacity utilization across cells and modules.
See, yes, there are, the solar sector is expanding rapidly. First of all, we have to understand that we are going from a pace of 15 gigawatt per annum 2 years ago to about 30 gigawatt plus this year. So there's a huge jump in capacity addition and growth factors. On the ground, inevitably, there are some delays related mainly to land and transmission. Notwithstanding that, we feel that there is a very, very strong growth momentum, particularly with schemes like Surya Ghar Yojana, Kusum, open access projects, etc. So overall, the demand environment is extremely positive. And we are seeing that directly in our business. Our production lines are almost fully sold out for the next almost 12 to 15 months of production. And our lines are working at nearly full capacity utilization.
So in that case, you're working at full capacity utilization. Is there any plans to expand capacity? That is one. You've outlined a capex of 1250 crores. So how much of that will you incur this year? And what's the asset turn that you're expecting on this too? And clubbing one more question in, from the Reliance AGM on Friday, there was a big announcement that was made that they are planning to develop one of the world's largest solar projects of around 550,000 acres of land. What kind of opportunity do you see in this announcement, if any, if you could quantify all of these for us?
Sure. So, yes, we are rapidly expanding our capacities. In fact, our plan is to grow by more than threefold over the next 2 years. We aim to become a 10 gigawatt integrated manufacturer, including ingot wafer, cells and module capacities. And then we are also entering into new market segments like battery storage and inverters. In terms of your next question was about the capex plan. So our capex plan is 12,500 crore rupees over the next 3 years, including the current year. This year we will spend about 20% of that money, and then the rest will be spread over the next 2 years. In terms of Reliance's announcement, I think from what our understanding is that bulk of their capacity is meant for internal consumption. They have a huge plan for achieving net zero target in their very large petrochemical and energy business. So to that end, we don't see any impact on our business.
Okay, all right. Thank you so much for joining us today and giving us a sense of what's happening on ground as well. Those, by the way, are the visuals, the bilateral meet which is happening between Russia and India. A lot of updates coming in from the SCO meet. We'll keep getting you all those updates as well. Some update from the US Embassy in India as well, where they're talking about how India and the US are partners in terms of trade. There is an enduring friendship between two peoples that fuels this journey. So a lot happening in the geopolitical arena. We'll keep getting you excerpts of what's the outcome of this bilateral meet as well. Very important. Remember, a big chunk of imports come in from Russia in terms of oil, and a lot more in terms of imports and exports. So we'll keep discussing that. But for now, we'll also talk about the share of oil imports coming in from Russia. Now, remember, back in 2021, 2022, it was around 10%, less than 10%, and now it's around 34%. And that's been something that is benefiting overall the crude economy because it's coming in as a discount. And yes, there you go, the footage that is coming by Modi and Putin's bilateral meet in China.
This SEO has been there for so long now, I think about 25 years, but it's the first time that it's assumed a scale of this significance, right? In the wake of, the tariff tensions, etc., and the friction taking place. And so many world leaders are in attendance, and some of them sharing the stage for the first time after months, like for instance, India and Pakistan too. right?
And India is attending it after
7 years. This is Modi's first visit to China after 7
years.
So this summit is really setting the tone. Geopolitics is going to be the big market theme this week, and we'll keep watching out for what comes out of it with the various bilateral talks.
Assuming greater significance indeed, and these are of course visuals, the bilateral between Prime Minister Modi and Russian President Vladimir Putin. We take a short break. On the other side, of course, with that we call time on this. And well, just as but of course, as you mentioned, right, is assuming greater significance of these bilateral meetings, there is also now this lingering uncertainty over whether these tariff impositions would even last the test of time, because the appeals court has deemed them illegal, although they've of course given them time to until the 14th of October to appeal against this in the Supreme Court of the United States. And what the mathematics suggest is that the Supreme Court is a 6-3 in favor of the Trump administration. So logically speaking, of course, these tariffs would most likely be upheld by the US Supreme Court unless something dramatic happens. But yes, this tariff threat and all of these tariff tantrums from the US administration has definitely started to create new allies, or bringing countries that had a rift earlier closer together again with China and India after what happened in Galwan in 2020. This is, of course, the Prime Minister's first visit to China on this, and of course there is a lot of cooperation between Russia and India.
It's basically, oil and gas and energy security is going to be at the center stage, right? Because India's additional 25% tariff is on account of India importing Russian crude oil and the supplies coming from there. And so far, India hasn't taken any sort of a policy decision on that front. Well, we'll keep getting you more on that. For now, it's time up on Trading Hour. Thank you for watching.